Hello and welcome to a beautiful new week. The markets aren't doing so hot, but we've got a lot to talk about. So let's just dive right in. Boom. Now, in trying to understand a little bit of what's going on in the macro, there's just one thing I want to look to that does feel to be pretty positive for the asset prices, especially when we're talking our sweet, sweet digital assets. That being the M2 growth globally. Now, the M2 global supply of dollars is just basically liquid dollars. It is mostly comprised of dollars in savings accounts, bank lending, opening up and expanding, and 401ks, things of that nature. But we can look at it as sort of a dollar supply that is there to be spent or to utilize. Now, this is not the same as money printing or any of that effect, but what we can really see is just, damn, look at how like M2 global supply has just continued to expand. Now, in the early times, Bitcoin growth greatly outpaced it. But what I want to just point out now is that we are seeing this large expansion. And of course, the last time we really broke out, and this is due to a lot of money being injected into the just global ecosystem, but we generally see this kind of Bitcoin catching up. So look, we have this really high, all-time high on the monetary global supply of, again, capital dollars that as crypto becomes more attractive, could be utilized to purchase these assets. So all of this is to say, I mean, look, there's still probably buying appetite involved. I would want to see this gap start to shrink before you really start to think a top is in play. Now, one of the other things to look at is one of the premier assets of this cycle, which is Hyperliquid. Everybody's trading on it. It has become this KYC-less, decentralized access to perps, which are one of the greatest tools for day trading, gambling, leverage, all that fun stuff. And what John Charbonneau is talking about here is that if Hype were to flip the other assets, excluding Bitcoin, he says it's not crazy because it's already out earning all of these other protocols. So let's just take a quick look at this. And I mean, one thing to note that is just kind of nuts, Hyperliquid, it's really an application first. Yes, it has its own EVM chain, and that will continue to grow with DeFi apps and so on. But for the most part, this revenue is coming from the exchange product that sits on top. Now, that's outpacing Solana, Tron, Ethereum. These are orders of magnitude larger in what they are offering and what they are building, right? And Ethereum, a Tron, a Solana, they would love to have a Hyperliquid on top of them. Now, technically, Hyperliquid is EVM compatible. So it's like sort of on ETH, but not in a way that its value would flow back to Ethereum itself. So this is pretty crazy. But this was all in response to this really outlandish proposal that Arthur Hayes of BitMEX made, which was that Hype has a 120x multiplier inside of it. This would put the Hype market cap at 5 trillion, which is pretty effing nuts. But what we are seeing is that perps are the product market fit of all product market fits here. Obviously, we're getting some other markets taking the reins, but we can clearly see that with a tech that makes markets out of anything, it is the market providers that are winning the most. Polymarket has been doing gangbusters with predictions markets. We still have some NFT marketplaces doing fairly decently, but when we look at Hyperliquid and the buybacks, now remember, Hyperliquid launched without any venture backing. So their primary model is that they take that fee that they earn and they buy back the Hype asset. When we look at other buybacks over a 90-day period, I mean, damn, Hyperliquid 90-day buybacks is $240 million. This is greatly outpacing Jupiter, who's the follow-up, with 36 mil, and that's pretty amazing, to be honest with you. We have Pump.Fun, who's notoriously doing a ton of buybacks, and they are a launchpad. So you could kind of consider them a marketplace of new coins where anyone can create one. You have Bonk doing the same thing, Radium, Aave, and Aave is, I mean, this is kind of sad because Aave is in many ways one of the most significant products on this list. They are the borrower lender, and they are one of the largest scaling and most OG projects in Ethereum. Now you can see Hyperliquid just vastly outpacing them. So this is pretty nuts. And when we think about it, I mean, okay, 120x multiplier, like pretty crazy, but maybe it's not so wrong to think that Hype should be a top 3 asset. And Hyperliquid's been a belle of the ball for a long time. Now, one thing to note is they did do a massive airdrop, so they're likely repurchasing a lot of people's exits. And what they are doing here is not only securing the value of their own asset, but they have successfully made many of their early users tremendously rich. Keep in mind, at current prices, the initial airdrop for anyone who went onto Hyperliquid and simply clicked a few buttons is now around 2 million, 3 million, something like that. They are a proof case of a highly successful launch that both rewards its early users and demonstrates the pure capacity of the bootstrapping mechanics of crypto. Now, they are an outlier. Again, they took no capital, they self-funded themselves, and they were able to build an amazing product on a 12-person team. But Hyperliquid, like Tether, like Pump.Fun, is now proving to be one of the highest revenue generating companies in the entire planet per employee. I do think that this is very much a glimpse into the AI future, where teams like Tether, which are under 80 and are producing billions, teams like Hyperliquid, which is a 12-person team, also producing billions. Same with Pump, they're like sub 12 people. And what we are seeing is not just the capacity for data and software to scale, but for a limited employee set to create these tools and these features that are in and of themselves so scalable that we can create these multi-billion-dollar businesses, these just absolute slaughterhouses with a very, very small team. Crypto unlocks that, AI unlocks that, and we are only figuring out more mechanisms to do so. So I think this is a very, very clear look into what we see in the future. Of course, when we look at revenue by protocol, obviously Tether sitting at the top by quite a lot, right? Revenue in 24 hours is $21 million. Circle doing a similar thing with $7 million. Of course, then we bring in Hyperliquid, boom, doing $6 million in the last 24 hours. So again, this is a team of like 80, I believe. Hyperliquid's a team of 12. Pump also a team of 12, doing $1.4 million a day. Hyperliquid doing $6 million a day. Now, as these features open up and they develop, will we see Hyperliquid sort of backwards morph into a complete chain? That is certainly the goal, but this is a very fascinating glimpse into the future of work. For anyone that missed Hyperliquid earlier on and was not really present for riding that wave, there is something to look at just if for a heads up, which is Aerodrome Finance. And why I say that is because they sit at the core of Base's DEX swaps. So Coinbase adding decentralized exchange swaps to their Base app, their everything app of money. Aerodrome Finance sits at the core of that. And what's interesting to see from Wagme Alexander says, look like Base is about to blow past its DEX volume record with only 5% of Coinbase users onboarded. So that's pretty cool to say, hey, if Coinbase can open up way more than 5%, I mean, we're seeing the DEX volume just pick up steam, and there is one asset that captures that. And of course, that is Aerodrome, ticker Aero. AERO. I don't usually talk about tickers and prices. It's a good asset. It's very much worth checking out. But again, we're seeing this revenue meta picking up steam, and things like markets, like exchanges that can take fees, that can generate real revenue in a highly automated way are looking quite juicy. Now, the one thing I really wanted to focus on today is this wild Politico article that came out earlier. And it says, Wall Street faces a reckoning in Washington as crypto influence grows. And what we are seeing is that since the Genius Bill passed, there is this very aggressive awakening from the banks. What they really want to protect are those savings accounts. They make their money by borrowing the dollars that users store and taking on some additional risk. So if those borrowers, or even if people are storing their cash elsewhere, they won't be able to access that amount of capital. So this is really interesting because during the Biden admin, the traditional anti-bank Dems like Elizabeth Warren, who made her own whole platform on being anti-banker, waged this war on crypto. Remember her anti-crypto army. This caused the crypto companies to lean towards the GOP, especially into Trump, donating tons of money, raising these super PACs, realizing that now not only are they building technology, but they have to deal with the regulators based so far away in Washington, and that they needed to lobby. They needed to get funds up and running. Now, of course, the tremendous success of crypto helped greatly, right? We had a lot more money to work with. And that being said, we just got to accept blockchain is the digitization of capital. It is faster, it is cheaper, it is easier, it is more transparent. So there's no reason why they shouldn't be winning. But there's just some really far out things that come out of this take. And just explicitly, like I said, here's the warning, right? Warning that some crypto-friendly reforms could upend their businesses and threaten financial stability. Now, that's kind of funny because we're actually looking at a platform that should be theoretically more stable in the long run. It's certainly better on the user side. And their primary tool to do this is something that continues out of that same effort that galvanized the crypto industry, that anti-crypto point of view. And we can see it here. For example, bank groups are trying to slow a push by crypto firms to secure national banking licenses. Now, this should be something that if you're actually worried about, again, financial stability, you would want these licenses. These licenses are a way to operate a bank under greater regulatory scrutiny, or even having access to the Fed for, again, accessing the cash printer. Now, for anyone who's curious, Custodia Bank has long been at the front of this. They're out of Wyoming, so they're fitting all of this Wyoming theme that you've been hearing, but they have been trying to establish one of the most risk-off banks ever. We're talking about completely collateralized, just overboard on risk management. Why? So that they could both access the Fed banking accounts and manage Bitcoin. They are wildly against lending out Bitcoin under the thesis that you can't do it, right? You can't rehypothecate a Bitcoin. So like, what is lending about? And their solution just has been, again, this immense framework of what the safest possible bank looks like. But they have faced wall after wall, and they're one of our greatest evangelists. So all of this kind of just feels counterintuitive coming out of the banks. But what we can see is that they're clearly shaking in their boots. And of course, this is going to be disruptive. You're seeing these concerns. They're especially pronounced for smaller banks, which say they could suffer from customers pulling their money out and parking it instead in crypto products like stablecoins. It feels like there's a move to replace us, and there is, because nobody needs a bank when you live in this mobile world. When your savings on blockchain can be accessed from any single device in your home, and the capacity to store these things, maybe without seed phrases, is only growing. So it's kind of crazy because the stablecoin bill, the Genius Act, did actually remove the capacity for yield sharing. And that was at the behest of the banks, because this would have just been a much better product offering. So the people that love to say a free market finds its balance, finds its equilibrium, they're exactly the ones saying, well, if we were to allow the free market to open up, competition would simply be too hot, and we would be at this immense risk of really an accelerated shift from the old school money ways. And keep in mind, all banks are built on tech that is pre-1970s, pre-computer, into this modern, updated, mobile-first, digital everything monetary system. So at the end of the day, I mean, what are we going to see? Are the banks going to go towards the Dems to cozy up with them around banking? I mean, the fundamental ethos of that opposition, because Trump, in all honesty, has made a lot of money off the cryptocurrency industry. And it's all because the previous admin did not want to lay down the framework to say, no, you can't do this. They instead ignored it, trying to push it away, hoping that it would die. And in many ways, while they made the episode about Trump coin called It's All a Grift, it could be one of the greatest things for the cryptocurrency industry to reward this president, to show this man in power the value of the industry, and to get him on such a personal lock that he's willing to move against the interests of things like banks that have just tremendous lobbying power anyways. So all of this is happening, and we're starting to see this flare up. I do suspect that this is going to be a fight that increases in volume. Every child born into society now will lean towards crypto. It's simply more digitally native. And the banks are old. They're funky. When I go to the branch, it's quiet, it's weird, it smells, it's not open all the time. My ATMs are restricted because of homelessness, so I can't even get money when I want it. And at the end of the day, as was stated in a recent interview with Coinbase's head of policy and general counsel, Paul Grewal, who was formerly a judge in the courts, he said, look, when you talk to any enforcement agencies, the FBI, the CIA, yada, 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 they all prefer dealing with crimes that have a blockchain element. There is a paper trail, there are breadcrumbs to follow, and when cash is involved, that's simply not there. So when we're talking about money laundering, crime, all of these things, blockchain still remains a better mechanism than the traditional finance infrastructure. So some real concerns are beginning to come out of the banking sector, and in all honesty, a yield sharing stablecoin would be a fundamentally better product. And what's so crazy is that in this battle, there is this virtuous element coming from the crypto industry. It says, at the same time, crypto executives are lobbying the White House to preserve a ban on banks charging fees for access to customer data. Like, that is a pretty grimy thing. The more data they collect on us, they're going to go and profit off that. They profit off us giving them their money into deposit accounts, which they can take on increased risk and make more bankroll off of that. They would also be able to sell our data. if they had this mechanism in place. And look at some of the good coming from the side of crypto, really. At the Consumer Financial Protection Bureau, crypto executives successfully lobbied the Trump admin to back down from its efforts to join with big banks to nullify the Biden-era open banking rule governing consumer data sharing. This is something we want, just like HIPAA. The same way we treat our health data, we should be treating our financial data. I've railed so often against KYC, but I mean, imagine this, right? They KYC you to get all of your data, to add in things like social address, whatever, to other pieces of information that are really the only thing required to make a transaction. And what the banks want to do is to build a wall around that garden, package that information, and sell it to people. So not only are we looking at a chain that's fully transparent, where anyone can seamlessly engage and interact with this open garden of financial primitives, products, etc. Also in crypto, we have the capacity to implement tech-like innovation. This is something I've always said has attracted me to the space, which is that a 12-year-old on a science project could launch the next great financial product. This is simply not something that can happen in the banking world. It's not open and available, but inside crypto, just like all software, anyone is able to come in and build some amazing piece of software that unlocks tremendous value, accessibility, whatever it might be. But that barrier is so much lower, and we expand so far beyond the finance world when we merge this with digital that the banks are simply shuddering in step, not knowing what to expect. It's clear that they have a very old world model that is being wildly upended. And of course, we haven't even added AI agents on top to automate all these processes. When it comes to things like tokenization, the banks are saying, hey, there's concerns around making stocks trade like tokens. But why? Why do we need the NASDAQ to settle all of these trades if we can actually get Solana to facilitate NASDAQ on chain? We can have this all be automated. And of course, these complaints are coming from some, like the Securities Industries Financial Market Association and Citadel's Securities, the trading behemoth owned by blah, 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 who are what? They are a full stack business of financial intermediaries that serve a function that could fully be automated by code, but take a fee to perform that function. Now, even if code takes a fee, and maybe it should, these platforms, if they scale, they need to make profit. They are still some sort of profit center, some business margin. But unlike a bank, which is going to take egregious sums because they hold licenses, they're esoteric, they have to sit a human in the middle and make a bank account, these automated processes can do it for a fraction of the fee because they're looking at so much larger scale. And of course, the nature of decentralization means that we can actually support a lot of these processes through a decentralized network of contributors that are able to capture that upside through the token capital capture effect. So in a nutshell, I mean, I just think it's absolutely wild. This is probably a story that is going to pick up speed, which is banks versus crypto, and they are going to fight over policy. This policy will likely come from both sides of saying, hey, we want to find a way to work together, but of course they don't. Because a true digital financial ecosystem means none of the intermediaries that they build all of this wealth generation on top of. Again, there's an entire licensure system that's just simply not going to be needed when the code says X plus Y equals Z. You will always have the output that is programmed in, and that can be verified and that can be accessed by our AI agents. So this is, I think, the beginning of the next great battle. It's fascinating to me that the banks and the GOP have traditionally been aligned. I mean, one would think that Trump would be all the way in Camp Bank, except for this crazy fact that the Dems went so wild in the opposite direction that crypto had no choice but to latch onto Trump. Eric Trump was even on TV recently saying, hey, look, the Dems so aggressively debanked us, just like they did to the crypto industry, that our businesses couldn't open savings accounts. We couldn't pay our employees their monthly earnings. And as a result, they turned to crypto. And this is exactly why it was all invented, to say, hey, look, at some point, the powers that be don't like what you are going to build. There should be an alternative system. There should be something that is open, accessible, obviously transparent. The compliance behind that is being built. Now, is it savory that, it is Trump businesses and offering whatever they offer that is the one to latch on and click? No, that's not exactly my ideal. But the way this is working out is just so mind-blowingly fascinating. They felt themselves under the same constraints and restraints and merged with the crypto industry. The crypto industry, likewise, feeling that pressure, started to donate money, started to build and contribute and flow that capital back to Trump himself. So we'll see what kind of lobbying efforts the banking industry could ever possibly pursue when the Trump family themselves have already generated over $1 billion in their company assets through a lot of these crypto products. That is something that I just think is going to be a very tough nut to crack. How do you incentivize him better than this industry has? Is it something I'm super proud of? Obviously not. But in the long run, it may be one of the best things that the industry has ever done. It hasn't cost us much. We're just building open and accessible technology. The Trump family is selling their product on top of it, just like they did with Trump Steaks, Trump University, yada, yada, yada. But this time it's clicking and it's winning very well, and the power dynamic is something that should be corrected, but this relationship, this sycophancy with the Trump camp might end up being what gives crypto as an industry that boost that it needs moving forward. Either way, the bank versus blockchain fight is just beginning. There's no doubt in my mind that digital wins. Digital is where we're going. It is a better platform. I've said that so many times, I'm going to shut up. So with all of that being said, I will keep a close eye on this. Lots of new tech platforms are launching. The Say blockchain, again, another very small team, around 20 or less people, building a high-speed, very robust chain that is focused at institutional investors. So we will continue to not only steal a lot of Wall Street itself, but the banks are going to have to come up with competitive systems. And unfortunately, at this point in time, if they launch a product that looks like Tether, well, Tether's already out there. So they're going to have to compete on merit, on is their product better. This is healthy for society to have this kind of disruption. This is healthy for society to have blockchains just offering a better solution. And at the end of the day, crypto's just looking exceedingly strong. So onwards, soldiers. Have a wonderful day out there. Don't lever up because, as we've seen, volatility is off the charts. Stay safe, and I will see you tomorrow.